Good evening, ladies and gentlemen, and all of you. You are welcome to Perspective Nation. Today, we are going to be talking about books which have been written by Mr. Victor Eboa, as well as what is the whole meaning of stock and the stock exchange and how we can invest in the stock exchange. And at the end of the day, we'll try to look at what stocks people can invest in 2022. Mr. Victor Eboa, I would not waste any time. You are an old guest on this panel, engineer by studies and profession, and marketing consultant by choice, as I will put it. Welcome to the show.
Thank you very much, Mr. Fwange, and thanks for having me. It's always my pleasure to be with you.
Thank you for taking the time out again over your busy schedule. So let's just go ahead. I know we have a lot in the package to discuss today, so I won't waste much time. Let's go ahead. Tell us what's the reason that brought you to start writing books? What was the motivation behind you becoming an author?
Okay, good. So thanks very much for that question. In 2018, 2019, I started shooting videos on YouTube. When I started shooting videos on YouTube, I realized that people are more interested on the financial field.
Good. Yeah, go ahead.
Okay, good. So my motivation came from my YouTube channel. When I started my YouTube channel, I was talking about finance. I was talking about how to reduce your expense to grow wealth. I talked about how to grow your asset. I talked about the quadrant, cash flow quadrant. So while I was creating all this content and I was having all these subscribers coming in, which at the moment I have 2,500 subscribers. So some of my viewers suggested to me, Victor, you have all this content. Why don't you put it down in a book or a course? So when the first person said that, I thought, okay, it was just like a suggestion. And then I have a Concord group with some Americans. So one of them wrote a book, and not the second person suggested to me. So I said, okay, this seems to be interesting. So I now started writing the book. So that's how I started, getting more interest. And when I started writing my book, I considered each chapter as a paragraph. And from those paragraphs, I developed now to come up with the book. And the title of my book is Growing Wealth Passively. We're all doing 9 to 5. You're an engineer yourself. We have people who are nurses, people who are accounting. They are doing their 9 to 5 job. So I said, okay, we are doing this 9 to 5 job. We are pretty much occupied. So how can we make extra income? That's when I came up with passive income. Passive income, which means when you start it, you can start generating income continuously with little or no effort. So that's how I came with that particular book.
Okay, thank you. I wanted that you've mentioned a bit of what I wanted to go into, which was how did you choose a topic for that book? But your next book was the Ultimate Stock Market Investing Trade. So how did you choose that topic for investment, and what is the content of that book?
Okay, that's a good point. So while I was shooting videos on YouTube, just of a sudden I realized that African Americans were so interested in the stock market. Then the second was South African, then Nigerians. So while I was creating all this video, I thought to myself, okay, these videos are just there in YouTube. Why don't I get this content and put it on a different platform? So I thought about online course. There's another way that you can create content by writing your own course and you publish it online. I don't know if are you familiar with Udemy or Teachable?
Yes.
Good. So I started by writing a course. So when I wrote that course, the course is right now on Thinkific. But I realized that in my community, not everyone is versed or knowledgeable about online course. Some people will not just go and sit in front of the computer and watch videos and PDF and PowerPoint. So that's what prompted me to come up with a book that people can have it as a handbook while they are investing or trading. They can use it as a guide. So that's what prompted me to write that book. And when I started doing workshop, when I do a stock market workshop, my audience, after having all this knowledge, I want them to retain some information. And instead of giving them a handoff PDF, why not just have a book? So that's how I came up with the ultimate stock market investing and trading. Why I put investing and trading is because if you are in the stock market, if you buy to hold for a long term, like Warren Buffett, they call it investing. If you want to buy and trade the same day, like a day trader, they call it trading. So the book takes both investing and trading at the same time. And of course, you know what ultimate is.
Yeah, so
I don't need to get into that. Yeah.
Yeah, so your books are really seems to be targeted towards your own community or people who don't have the knowledge of getting into stocks. Is that something that you plan, and is that what you've achieved?
Yes, exactly. So let me just take you back to why I am bringing this to my community. When I started working or out of the university, I made my first $5,000 as, savings. And I said to myself, instead of this money sitting on my savings account, why don't I try to invest the money? I go to the bank. They gave me two options. You can go with mutual funds or you can invest it in GIC. So I said, what's the difference? They said GIC is guaranteed, but the interest rate is very little. It's a stock market. You can make good money. You can also lose all the money. It's pretty volatile. So that got me thinking, you can make a lot of money and you can lose all the money. So I said, you know what, for now, let's go with the GIC. So I kept the money in GIC. I went back to work. I spoke to some of my colleagues. When I told them about mutual fund, they started laughing. They said, oh, that's deep in the stock market you are. So I'm like, okay, so what does that mean? They started explaining it to me. You invest in companies. So stock market, pretty much you invest in someone else's company to either make money or lose money. So when I started stock market over 12 years ago, I was pretty much the only one who was buying and selling shares by myself. I checked with some people in my community. They are either not in the stock market or they are buying just mutual fund. And no disrespect, with mutual fund, the bank will manage it for you. So you will pay them some fee. It ranges from 3 to up to 10%. The bad part is that if your stocks or your portfolio is underperforming, they still have to take the fees. So on the rare case, you will make some money, but not up to the potential as if you were doing it yourself. So I came in now to start bringing out to my community on how to buy stocks and sell stocks yourself. The first thing I advise people to do is, well, you might think it's complicated, but just tell your bank to open you a direct investing line. If you go with Bank of Montreal, RBC, they will open you a direct investing line. They might push you because they know most people are not knowledgeable about stocks. They will always tell you that it's very risky. You will lose money, which of course you might lose money if you are not knowledgeable. That's why I wrote that book. But eventually, if you start getting a good grab of it, with time, the knowledge builds up, you'll be able to trade it yourself. So after doing that, I came back to my community. I started doing some presentation. Sangun Jabbar from Houston, he is a pastor in Houston. He invited me to do a presentation in the church. When I went there, I did the presentation. I realized again, most people were mutual fund. There was one lady who was trading already in the stock market, but she had that conception or notion that you can either make money or lose money. So I spoke to her personally. I'm like, why do you think you can lose money? She said, that's how it is. You either make or you lose money. I said, but if you grab the risk management technique, don't you think you will not lose money? She's like, how does that work? I invited her and she took my workshop where I break down all the risk management technique. Just during that period that she was taking my workshop, she ended up making over 25,000 with one stock, which was Nicola. So after that, the news started going out. I started going not only individually, I started taking it to our communities, to different groups.
Okay, let's just take a step back. I hear you talking on some of the presentations you've done. I've watched some of your videos on YouTube. I've seen, I think, Diaspora TV, where you're giving lectures, but I've not actually seen you presenting within our community. Do we have, our local Cameroonian or Nigerian community groups here in Toronto? Do they invite you to teach people about stocks, or what have been your interaction with these communities? And if they don't, why do you think they don't invite you?
Okay, the first one is that, yes, I've been invited. I belong to an investment club here with the Cameroonian investment club called Can IG. I've done a presentation with them. I also manage their stock account. I've also been invited by Investor 100 Club. They are also investors, so they have a little bit of knowledge. They were dealing with real estate. They wanted to get into stock market. I've also been with PHS Batibo ex-student in the US and around the world. I've done it for some churches. So see how it goes. In our community, Cameroon, Nigerian, most people, when they hear about the stock market, the first thing that comes in their mind is losing money. The first thing that comes in their mind is that they will lose money. So most people, even some people who are knowledgeable, they get into the stock market. The first stock that they buy, they might buy a stock and then the stock start underperforming and then they feel discouraged. And when they feel discouraged, as time goes on, they don't continue practicing. What happened? They just abandon that. Stock market is not theory, it's practical. You have to be buying and selling stocks regularly. One thing is that Warren Buffett said the stock market is a device to transfer funds from the inpatient to the patient. So you have to be patient. I was telling people, some people are in the stock market, they've bought one or two stocks, it has underperformed for some time, they abandon it. But what about the good times? So look at it this way, let bygones be bygones, concentrate on the future. Stock market is something that can give you regular income day in, day out, day in, day out. But I always tell people, stock market is not like a get rich scheme. No, you have to put the work and you will see the return. So why most people in the African communities are not in stock is because they are not knowledgeable about it. And also when they look at courses from Robert Kiyosaki or Tim Skypes, it's all over $5,000, $5,000, $10,000, even $20,000 for a stock workshop. So I think that's one of the reasons. You are mute.
Yeah, sorry, but we have a lot of local organizations within our community, like small meeting village organizations. Why are you not going to these groups to inform them or to inform you or to inform us? As you say, the biggest challenge we have is the knowledge. I know you are one of the leading community members here, way back from the time of ALCA, and a lot of people come up to you for advice. So why are we not seeing you within our own Cameroonian and milieu, basically?
Okay, that's a good question. You see, when I create content, when I create videos and I share it, if you watch the video and you're interested, you come to me, I'm going to pass the knowledge to you. Let me tell you, most of my friends, my very close friends, they only see my videos and books, but they don't even know exactly what it is. So the way I pass my messages through my video, I had a conversation with someone before. They were thinking what I was saying is network marketing, like you bring someone and you connect with someone else. Again, people are not aware of the profit that they can make from the stock market. So I think the main thing is like what you are doing right now. If you spread the message out, then you might get people interested. And if these are people who have, if you come with the good mindset, because for you to get into stock, you need to have the right mindset. Before I coach someone, I try to interview them. If you are very emotional, I try to tell you that maybe stock market is not for you. Because some people, when they buy stock today and for some reason the next day it goes down 10%, 20%, then what happened? They freaked out and they lose interest, but that shouldn't be the way. So not only am I doing the workshop, but I'm also kind of counseling to know if this is what is good for someone.
Yeah. So talking about us being nervous to getting into this talk, we always like to know what others have gone through before we venture into it. So tell us a bit more about your introduction on your first stock. What was the first stock that you yourself you studied and then you buy, and how did it perform?
Okay, good. So the first stock that I bought is Coca-Cola. By the way, I already explained to everyone what the stock market is for people who don't know. You invest in somebody's company to either make money or you might lose money. So people spend the energy to create their company. Because you don't have a company, but you want to make money, you get into their business. So consider it as a business. When you do a business, you can either make money or you lose money. And that's what I always tell people. When you get into the stock market, look at it as your own local business. When you look at your own local business, sometimes you make a lot of money. Some years you make 20,000, some years you make 30,000. There are some years that you lose and you write it off on your taxes, right? That's the same way you look at stock market, because the person who owns a company, that's how they look at it. So the first stock I bought was Coca-Cola. You all know Coca-Cola is a company that has been around since my great-grandfather, my father. Everyone knows Coca-Cola. Coca-Cola is in every continent. So I bought Coca-Cola after taking my workshop and doing a little bit of research. I bought Coca-Cola. I held Coca-Cola for almost 6 months. Then I realized that Coca-Cola is saturated. Saturated, which means it was flattened up. So you will buy Coca-Cola around $55 per share. It will just move to $60, $65. Then sometime it comes down. There is no more room to grow. And for some reason, I don't know why the founder or the shareholder boards are not considering to do like a stock split to bring more investors in. So I held Coca-Cola. I didn't make too much money from Coca-Cola, but the good thing is that they are paying good dividend. In the stock market, you make money in 2 ways, capital gain and dividend. Coca-Cola was paying very good dividend. It is way better than a savings account or even mutual fund. If you buy Coca-Cola for $10,000, every 3 months you might see dividend coming of over $100. So that was the first stock I bought, Coca-Cola.
So when you buy Coca-Cola, let's stick with Coca-Cola, and you held it for 6 months, how much money did you make, if you have to put and how much, at what rate did you sell? Let's try to figure out like how much money you made within that 6 months.
Okay, good. Okay, just say if I bought Coca-Cola, in that particular portfolio, when I started the stock market, I started with like 5,000. Then as time goes on, I add another 5. So in that first 5, I had Coca-Cola for like 2.5. And then when I add more money, I added more Coca-Cola. Now, when I bought that Coca-Cola, again, it was low. I bought it when it was around 55 kind of, and then it went to like 60, 65. So look, each share that I bought, so one share was $55. If it moved to 65, that's how much? The profit there is what? The profit there is $15 per share, correct? and then now you multiply it by all the shares that I have. That will be a profit if you sell when it gets to 65. And then plus, for each of those shares that I own, every month, after every 3 months, quarterly, Coca-Cola will give you a dividend of 3%. So 2.93% kind of. So you sum the dividend plus your capital equity, that's the profit that you make. So if I held it for that period of time, if I sold it, if you do the maths, I might come up with maybe $3,000 or $4,000 profit.
Okay, let's just step back. I think you've started using a lot of investors lexicon here that some people might not understand. Let's step back and bring it to as easy as possible. So you want to say somebody wants to buy a Coca-Cola stock for $1,000. How does that person go about it?
Okay, good. So now you want to know where to buy the stock, right?
Yeah, where do you go? The person is not going. We've already discussed the challenges going through a bank. So that person is not going to the bank. Where does the person start? What are the fees? If there are any fees, what are some of the complications, and what's the process like?
Okay, good. So I wanted to share my screen, but do you want me to share my screen so I can talk about the structure of the market?
Let me see if I can. I think if I make you host, I'm going to lose the recording. Or start explaining. I'll just figure out how to allow you to share your screen. There should be a way to do it.
Okay, good. So initially, I already said investing in the stock market is like investing in someone else's company to make or lose money. So look at it this way. So someone come up with their company.
Yeah.
And when they come up with their company, it can be sole proprietor or partnership. If now they're in downtown, they decide that, okay, we want to expand to east, west, and north. So what will they do? They will split the company into small pieces. I normally use the pizza example. When they split it into small pieces, they can say, okay, now we've split our company into 10 pieces. Now, because of Fwange, you and Walters started that company, both of you can decide to keep 2.5 shares, 2.5 shares, that makes it 5. The remaining 5 shares, you can now take it to the public for people to buy. When people buy the shares, let's say Jeff buys, Rita buys, John buys, they become part owner of that company. Now you don't say it is your company alone. You are the main shareholder, but you have partners who comes in as shareholder as well. So when you make money, they also make money. They also have the right as shareholders to make decisions for the company. Now, the transaction in the stock market takes place in the exchange. It's very important to know. All the documentation, the in and out, the undertaking, it takes place in an exchange. In Canada, we have the Toronto Stock Exchange in downtown. The biggest stock exchange in the world is the New York Stock Exchange. You also have London Stock Exchange. So that's where all the transaction takes place. But if you want to buy shares, you are buying shares in either a bank or a broker. The first financial hub in the world is your bank. You can go to your bank and they will open your account, you buy shares. The reason I wanted to display my screen is I want to show people the difference between the different categories of stocks, how we get to mutual fund, index fund, and exchange traded fund. It's good to have that picture.
Yeah, sorry,
I
didn't select a co-host on, and I'm on the setting trying to see if I can get it. If I get it, then I'll let you know. If not, we'll just have to
okay, good.
Like this.
Yeah. So that's it. You can buy stocks in either your bank or you can buy it from a broker. In Canada, we have Questrade and Wealthsimple. You can buy it from there. In US, there's TD Ameritrade, Fidelity, Robinhood, and stuff like that. But the main question is, why do companies sell their shares, which I already started talking. Companies sell their shares because they want to raise capital for growth or expansion. When they offer that, people buy, they become, shareholders. So if you want to buy a stock of any company, you either go to your bank or you create what is called a broker's account or a broker's portfolio or whatever. It's the same like online banking. If you have online banking with Bank of Montreal or RBC, it looks pretty much the same. The same way you are transferring money from your checking account to your savings account, you will have it in. They will give you what is called the platform where you can buy and sell the shares. When you go in there, there's what we call, every company is represented in the stock market by a symbol. We call it the ticker symbol. Once you get to your platform, you can search all the companies. And then after you do your research, you can, determine or you can decide which company you want to buy. And once you buy the companies, it just like your bank summary, you see Coca-Cola, Walmart, it tells you how much you buy it, what's the selling price, what's the profit, all written down. So it's very visual, you can see it, and it's pretty easy.
Okay, I'm about getting that. So now, do you pay any fees for some of these platforms? And if you do pay, how much?
Okay, that's a very good point. When it comes to stock markets, knowledge is power, and the fees do matter. Number one, if you deal with your bank, after they've given you all the hassle back and forth, if you finally open an account with the bank, what happens is that the bank, anytime you buy and sell shares, they charge you what is called a trading fee. Trading fee may range from $5 to $10. The bank actually charges you $10. So if you buy 2 shares of Coca-Cola, they're gonna charge you the same $10. So it's like per trade. So if you want to buy with the bank, make sure you've already decided how many shares you want to buy. So that's with the bank, it's very high. If you deal with a broker like QuestTrade, some of them like ETFs is free. Commission, you don't pay to buy ETFs. But if you want to buy individual stocks like Coca-Cola or Walmart, QuestTrade will charge you $5 per trade. So that's why in my workshop, in my courses, I advise people to go with QuestTrade instead of the bank. They are all big financial institutions, so there's nothing to worry about. They are protected by the Securities Exchange Commission. So you either go with your bank or you go with a broker like QuestTrade. I normally tell people, because most people, as I said, when people think about stock market, they think about the risk. That's why I always push them to go to your bank first. With your bank, even though you are paying that $10, you'll be comfortable. As time goes on, you can now switch over to QuestTrade. So those are the fees when you are doing it yourself. However, if you want to deal with mutual fund, which mutual fund again is a pool or a basket of individual stocks. If you want to deal with mutual fund, you hear the word mutual, the bank will manage it for you. In that case, they will be charging you percentage of the capital that you invested. It might range from 3, 5 to 10%. You might think that it's so little, but with time it compounds. It compounds and it can get really high.
Okay.
So those are the fees.
Yeah. So again, people, I've actually put on the co-host thing, but it's asking me to restart if I want you to share. So I'm not going to do that. We are going to try and explain to everybody as much as we can. If you have a comment, please do not hesitate. Send us a comment or you raise your hand and we are definitely going to bring you in. If you have something to add, we'll greatly appreciate that as well. So I'm just going to go to the comments now. We'll try to make this as interactive as possible. We have a comment. So it's this is the person. This is what she's saying. It's interesting. Maybe for later, if time permits. I'm curious to know what he thinks about considering some personal principles when investing. AJ, I'm reluctant to invest in anything related to smoking, fossil fuels, or even Coca-Cola. So how to identify good stocks in line of our convictions. So some people have some moral standing or some beliefs that they don't want certain things. Do they have an option? If they go into like the question you're talking about, how are they going to figure out, oh, I don't want smoking, for example, I don't want to invest in tobacco products?
Okay, good. So what the question is all about is what type of stocks should I invest in? So that's under the principles of fundamental analysis, what to invest in. What I tell people who are new to stock is start first with your career path. If you are a nurse, you are already knowledgeable about nursing, you know about some of the vaccine right now, get to company like Moderna, Pfizer, Johnson & Johnson, you are very comfortable with companies that you are familiar with. Only buy stocks that you'll be able to track them because it's an investment. Investing in the stock market is value investing. When you buy shares of a company, the company have to do good for you to make money. There is no stationary. You cannot buy a share for $5 and it stays $5 or 3 days. It either goes to 7 or it goes down to 4. So you look at a company which is valuable. In my book, I talk about the ways of evaluating stocks. When you look at that, you know that, okay, you've evaluated this stock, this is a good stock, you buy. And once you buy a stock, make sure this is a stock that you'll be able to track to see if they are performing or underperforming. Don't buy stock. I see people buying, some people you are not smoking, but you are buying marijuana stocks. I only invest, it's like if you own your own business, if you go out there and you have a tangible store, would you sell marijuana if you are not a marijuana taker? Probably not. So deal with something that you are already comfortable with. After you deal with the ones that you are comfortable with, the next is you can go to what we call blue chip companies. Before you invest in any company, you want to check if the company is valuable. The company has to create value to make money. So there are some set of companies called blue chips, the Amazon, the Tesla, the Apple. These are companies that have already proven their worth. So you don't even have to struggle too much. You just have to buy them. With time, the probability that they will do well is like 90%. And right now there is a trend in the market, blue chip companies are splitting. So that's the response. Go to invest with companies that you are familiar with.
So how is that done? So if you go onto these platforms, can you click like a button and then you have a list where you can check out this one and then check in this one? Is that how easy it is? Or you need somebody?
Yeah,
go ahead.
Yeah, that's how easy it is. When you get to the platform, there is a lookup symbol tab. You just start writing the name of the company, it will drop down with the symbol. You drop down and pick the company. When you pick the company, it brings down all their data analysis. When I say data analysis, it will tell you what's their market cap, the PE ratio, there's 52 weeks low, and stuff like that. So it is pretty easy. You don't have to worry yourself. If you can do online banking, then you can trade on every platform.
Somebody has written a comment that is all of this in your book.
Yeah, all of this in my book.
So where can we get this book, and what is the best place to get that book?
Or you can get this book from our online global e-commerce marketplace, which is similar to Etsy. It's called vmal.com. So VEYMALL.com. So you can get it from Vmal. Or you have my number, you can contact me, I can send it to you. But the easiest place to get it is vmal.com. You can also get it from Amazon. It's on Amazon.
Yeah, so I'm going to put the link of the website vmal.com on our chat. So those who are interested, please go there. I understand on your VML. Let's just talk a bit about your VML platform. I know it's not related to investment, but that's an avenue where maybe some of our listeners may want to try some of the products you have. So just give us a short discussion about VML Then after that, we'll talk about your other online platform for investors.
Yes, so vmal.com is a global online marketplace. It's similar to Etsy, Poshmark, eBay, even Amazon. Why did I decide to start a company called vmal.com? When I created content on YouTube, people love online marketing. Online marketing is the future. Online marketing is the future. So after we've had all this good education, good knowledge, I even have a course on e-commerce. What I realized is that after taking this course, some of the students end up, they have a good product, but they cannot display their product worldwide. They end up selling in WhatsApp. You are in some of those groups, you see how they will share shoes, bags, and then they will be like, DM me, they provide their phone number. You are limited to only that group. And sometimes someone can call you when you are sleeping midnight, and you will not be able to do that. Instead, I created VMAL that in our community, people will be able to display their product without paying a fortune like in the other platform. So like with Etsy, just to list your product is like you pay some percent to list your product, and it also charges you like 16% anytime you sell a product. So I open it free of charge, list your product for free. When we started, VMAL is now about 6 months. The first 5 months, I was giving it out for free. Vendors are coming. We even have vendors from South Africa, people buying from South Africa. I was so astonished. One lady in Grand Prairie, Alberta, sold some shoes to a guy in Pretoria. I found it a little bit, they have a very good shipping system, so that's good. So when I opened VMAL, people love it, so it's growing, it's expanding. I want more people to come in. You can sell new stuff, secondhand, even secondhand and handmade. Those are the things that we sell on VMAL. So you come there, you open your account, and it's very user-friendly when you get to VMAL. When you scroll down, it tells you how to open a store. You click on it, it's just like you create an email account or something. Once you get in, you can now load your product and it will be on the storefront. So I just decided to do that as a way to promote business in our community.
Yeah, thank you for stating that. I've put up the link for VMAL, and the other one is VE Universe. So let's talk about, give us again what people can expect when they go to VE Universe.
Oh yeah, VE Universe is the online investment platform. So when you go to VE Universe, you will not only see stock market, there's also real estate, there's investing in bonds, there is investing in bonds. You also have like real estate crowdfunding. So there are different categories of investment. How to start your own small business. That's a very good point. There are a lot of people who wants to get into business. They don't know how to start. Those are the things you will see on VMAL.
Okay. So let's move back to...
Sorry, on veuniverse.com.
Yeah, both websites are there on the chat. Please, I'll greatly appreciate if those listening can go and check out these websites. And let's go back to stocks. So when a lot of us, the first time we start knowing about stocks is we start hearing words like the Dow Jones, the M&P 500, and things like that, NASDAQ. Can you just give us, take one of those, say Dow Jones, NASDAQ, and explain to us what it all means?
Okay, no, I will go with S&P 500 because it will make more sense.
Okay.
So those words that you call, those are called index funds. When we talk about the stock market, first we have two categories. We have common stocks and preferred stocks. Preferred stocks are when you work for a company and they tell you, if you buy our shares, we're going to match it. Those are preferred stocks. So with preferred stocks, company use it like some sort of a retirement vehicle. if you want to retire, it's mandatory. You have to, sell it back to them. So we don't talk much about that because very few of them are public. You don't see most of them in the exchange. Common stock is what we see on the exchange every day. So the Coca-Cola, the Tesla, the Walmart, those are common stocks. Common stock now is breaking down into individual stocks, which is Walmart, Coca-Cola, and diversified portfolio. When you say diversified portfolio, why did that come about? People realize that if you buy just Walmart and if it's not doing well, or just Coca-Cola if it's not doing well, you don't like it. They said, why can't I just have a little bit of every stock? So I diversified. In case one is going down, it can be supplemented by another going up. That's how they came up with the diversified portfolio. But when that came in, the bank rushed in and said, oh, we're going to do it. That's why they started with mutual fund. After people realized that this diversified portfolio, it is just the bank that manage it, people riot. They said, no, that's not right. I want to do it myself, but I still want it diversified. So instead of the bank selecting those for you, they came up now with what is called an index. An index is just like a hypothetical market. They can come to Toronto and they say, we look at the 12 or the 20 or the 50 biggest company in Toronto. They put it inside a hypothetical basket. That's what mutual fund is all about. If you go to the bank, Bank of Montreal will tell you, okay, your mutual fund is BMO 031. When you look inside, you will see Walmart, Coca-Cola, Pepsi, you see different stock. But most people did not know that mutual fund is actually deep in the stock market. So what you just call now is index funds. And why did index fund come in? People don't want to be the bank to charge them anymore. They want to buy something that looks good. So if you go to the US, you see Dow Jones, you have NASDAQ, you have S&P 500. S&P 500 is the 5 largest company in the United States. Dow Jones is for small tech company. NASDAQ is for tech companies. So you look at it, you see all the tech companies in the US. So you see Apple, you look at it, you see Microsoft. Then the biggest is the S&P 500. So look at it this way. They choose the best 500 company in the US and they put it inside a portfolio. That portfolio is similar to mutual fund. But this time, nobody manage it. What it does is it's like a mirror. If you go and you said you want S&P 500, they're gonna look at something in any broker, Questrade or the bank. They will say, okay, SPY is S&P 500. When you buy that, you go home, you relax. Why do you relax? Because the best companies are in that portfolio. There is Tesla, there is Tesla, there is Apple, there is Microsoft, there is Google. When they perform well, your portfolio perform well. So those things are called index funds.
So in this, let's talk about the S&P 500 a bit, just for a clarification. So if I go there and, as you said, this is the best 500, and there are some companies, maybe Lockheed Martin, that deals with arms, and I'm not willing to pay for those. Can I pick and choose which ones I want to buy stocks from, or it comes as a package?
No, it comes as a package. That's why you see they already have a name. If you take any company out, then it defeats the purpose, so the name goes out. So remember, there are board or shareholder that decides which company comes in. If they have a lot of investors saying that they don't like this company to be in, they can remove that company out. Because they want to make money, they can take that company out. Tesla just got into S&P 500 last year because their earning report was extremely good. So Tesla came in. As Tesla is coming in, they are kicking another company out because it has to be the best 500 companies in the US. Okay,
let's move ahead with another term that usually comes up in the news, which is the P&E ratio. What does this stand for, and how do we use it if we want to buy stocks or want to do investment?
Okay, the PE ratio is a technical term. You see, when you invest in the stock market, again, as I mentioned, you have fundamental analysis, which you check what you are buying. So PE ratio is a valuation in the fundamental analysis to compare companies before you buy. And PE, it's price of the share divided by the earning per share. So now it becomes technical. For you to get the PE ratio is just to know that the dollar amount that you are paying relative to the earnings per share. And earnings per share is the profit. So if you look at the PE ratio now, price per share over the earnings per share. Once you divide it, now you have to find what is the earnings per share. So now it gets a little bit mathematical. These figures are always given to you when you look at the data analysis. So don't worry about it. Nobody is going to do any calculation. When you go to Google, you type any company, you see the market cap, the PE ratio, they are all given. But the way they calculate it is the price divided by the earnings per share. Now, with the earning per share, for you to get the earning per share is the annual earning, which is the profit per year divided by all the total numbers of share. So you get a little bit technical. So see how it goes. If you compare two companies, let's say Microsoft and Apple are in the same industry. When you look at their PE ratio, if Microsoft is 20 and then Apple is 19, how do people look at it? People look at it as the one which is higher is like, oh, maybe I'm paying more relative to the earning that I'm going to receive. But if it's a little bit lower, maybe I'm paying the normal value of the earning that I'm going to receive. If Apple goes up to like $30 or $40, it becomes like it's overvalued right now. So people will be like, oh, why should I be paying more for something that I could get less? You know what I mean? So that's how it's you compare two companies. It normally ranges between it ranges from 14 to 25. It always on that range. But when I teach people in my workshop, I don't tell them to pay too much emphasis on the PE ratio because the PE ratio can be influenced by any factor. Like yesterday or the day before, Tesla just came out with their earnings report and they did extremely well. So their price skyrocketed. So in that case, the PE ratio will be high. It is not the true valuation. So certain condition affects, the PE ratio. What I tell people to look for a company, the first way to evaluate a company is to check their net worth, which most people in finance know what is net worth. Net worth is just their asset minus their liability. You want more asset than liability. If you can check it for the last 2 years, it gives you a bigger picture of what the company is all about. But technically, that's how you calculate the PE ratio. If it's too much, it means the company is overvalued. If it's less, the company is undervalued.
Okay, another thing that sometimes come up that we hear about is market capital. What is that all about?
Okay, good. So just to let you know, in my book, chapter number 3 talks about stock market strategies and evaluation. We talked about this PE ratio that I just explained. We explained it there as well. Market capitalization is just the total revenue of a company. It tells you the size. So look at it. I try to make things sound a little bit easier for everyone. So the total dollar value of a public company is to its outstanding share. So market capitalization, just look at it as how big the company is. If you look at Apple, you'll be seeing it like over trillions. You look at Tesla, just crossed the trillion. Last year it crossed the trillion. If you look at a company like Dollarama, it's small. You can see it, 30 billion. So the more the market cap, the bigger the company. So look at it as the size of the company relative to the outstanding shares.
Okay. Those of you listening and those who want to contribute, we have about 30 minutes to round up. Please, if you have any comment again, you can definitely put up your virtual hand or send your comment on the chat and we shall look into it. I don't know, you talked about something might happen and something might change. I don't. This is a question that you might not be able to answer. 2 weeks ago, we had this issue with the outage of Rogers, which I mentioned at the beginning of the show. Did that affect their stocks, and if so, how much, or by what amount?
Yes. What happened is that technical failures will affect the stock market. Geopolitical issue will affect the stock market. Economic will affect the stock market. Even personal. If the CEO, if you guys are following the news, the other time when Jeff Bezos of Amazon got involved in, a concubine kind of relationship, the share price of Amazon went down. Those things affect the market. So with Rogers, the good thing is that it happened on Friday. The stock market is not open on Saturday and Sunday. But guess what? After market, Rogers went down a lot after market. But by Monday, it was already the outage was they repaired the technical issue. So on that Friday, when we realized that since we're not moving around the morning period, it started affecting the market. Rogers is normally around the $60, $62. It brings it down to 58. So by the end of Friday, Rogers was around 58. But by Monday, by the end of Monday, Rogers picked back up to 60, and now it should be around 60, 61. So it affected it, but they were very lucky. Had it been it was from a Monday to a Friday, you would have seen big changes. But it was just through the weekend. But still, they lose some customers.
So using Rogers as an example, at what point would you advise somebody who wanted to buy stocks to buy at that time? Would it be the time that the stocks are going down, or you would tell the person to wait till Monday? Would you have said, oh, you know what, now that Rogers is, we don't have internet, figure out a way to buy the stocks now?
Okay. When it comes to the stock market, one of the good practice is if you can buy low and sell high, then it's good. So when I say buy low and sell high, it doesn't mean you have to wait until the stock go right down. So you look at the historic event of that company. Check, normally we say 52 weeks high or low. So look at that company within the last 1 year and see how low it has gone. How low it has gone. And then now, with the case of Rogers, if that outage happened and it dropped down, you know Rogers very well that they have able technicians who will repair it. So it's not going to really affect the value of Rogers. It's just like an instant dip. So if you were able to catch it when it goes down, good for you. Because guess what? By Monday, Tuesday, it will be back up and you've taken advantage of buying low. And then if you want to sell now, you sell high. So it's good to buy low.
All right, let's go to the comments. I might have skipped some. Yeah, somebody said that I personally recommend the book to everyone. Very helpful for beginners. I'm sure it's one of your clients who has gone through your book. I think this is more of a question. How will the upcoming recession affect the stock market? Will you recommend someone to start investing in stock markets now? So let's take the first part of the question. How would the upcoming recession, I think we have what, 8.1%? Inflation of 8.1%. How does that affect the stock market?
Okay, when you look at it, definitely any issue like economic impact affects the stock market. You just mentioned inflation. What is inflation? Inflation is the general prices of goods or service going up. The value of the commodity or the value of the service remains the same, but just the price that goes up. It is not good at all. So what happened? What happened with inflation? If inflation keeps going up, why your salary is not going up, nothing else is changing, what will happen? People will concentrate now and say, okay, as a human being, what is the most important thing that we must have? What are our necessities as a human being? Well, it's a question to you.
Oh, yeah, it's like housing, feeding,
good.
Your medical.
Good. So what happened is that as the prices keep going on, as human beings, we can still persevere to buy our food or our medical. Then we will stop buying other stuff like goods of ostentation, shoes, stuff like that. So when that happens, guess what? People, as concerns the stock market, people will start taking money out of the stock. They will sell all those stuff that are not necessity. And once you sell, when a group of people are selling some particular stocks, what happens? It takes down the price. So you start seeing volatility in the market. So recession, inflation, not good for the market.
So the next part of the question, will you recommend someone to start investing in stocks now?
Okay, good. When it comes to the stock market, Warren Buffett said, be fearful when others are greedy. Right now, people are thinking, when the war in Ukraine started, most people were thinking it's, another world war. Or there's a recession coming. When all these things happen as a result of the inflation or interest rate, prices of some important stocks goes down. Right now in the stock market, there is a trend. Blue chip companies are splitting. Amazon did it last month. Last week is Google. If you are in the stock market, my advice is, I have two advice. If you're in the stock market and you are someone who is emotional, which means if you see your share price leave $100 and goes down to 60, if you can freak out, then better leave your money in the account. Your stock account or your stock portfolio is equally like a checking account or a savings account. If you're the type of person who you are so worried, then just leave your money, don't buy right now because the war is still there, there will be volatility. That $100 can even go to $40. So keep it aside, don't buy right now, just keep your money there. If you are someone who is a little bit experienced, or what I call, you have the diamond hand, which means you are already in the market, or the elephant skin, this is when you take advantage. You take advantage when there is crisis. Amazon was $3,000 3 months ago. Now Amazon is what? 117, 115, it went up to 121, 122. Today it's like 122. Nothing has changed in Amazon. The company remains the same. It is just this crisis. Amazon did not cause the war in Ukraine. Amazon did not cause any other issue. So what will happen if you hold that stock for 1 month, 2 months, 3 months? As I already said, you are strong. You know that's how they market it. Get what? The probability for Amazon to double by December is like 1. So it has a high percentage of doing well. The same with Google. So I was talking about the winning stock. So Amazon and Google is kind of the winning stock. Most of the time when I do workshop, we did not have the opportunity to get companies like Amazon and Google because they were over $3,000. Then now they are under $130. So it's an opportunity for someone who knows what they are doing in the stock market. Okay,
now you talk about companies splitting. How does that work? So say Google, how does that work with the investors that have already put their money in there, and then you come up tomorrow morning and like, oh no, we are now 2 companies?
Okay, that's good. So a stock split, nothing changes. The value of the company remains the same, but they take the share price, they chop it down into the ratio that they are deciding to split. A typical example, Google was around 2,375. They did a 20-to-1 split. So they split that 2,375. It comes down to 114. So now it comes down to 114. Nothing changes. Why do the company do a stock split? the board of directors will sit down and will say, hey, our share price is saturated right now. We are not making money because people are not coming in anymore, and we need to make more money. Why don't we split these shares? So the number now increase, more revenue comes to the company. At the same time, they give opportunity to small investors to come in. So small investors benefit, the company benefit as well.
So if I understand you, say Google was at 3,000 and they do that, and somebody had one share of what 3,000, and they do that 20 split. So that person automatically has 20 shares.
Yeah, that's right. You're one, and that's what happened with me. Your one Google now becomes 20.
And so you have the opportunity to sell maybe 10 if you want to.
Yeah, if you want to sell 10, you sell. I had mine splitted and the number just, you know, I had 3. So now it gives me how many? 60.
6. Okay. So we have another question. Does it mean that we can invest in things that are necessary for our living, like food companies? So this is a follow-up to your question about necessities of life.
Oh, yes. So right now, that's a very good point. So it means the person is following up. Because the inflation is happening right now, food prices are going up. When the price goes up, even though the value did not go up, it will still push, because people see it go up, people will rush the market, and that will start bringing up the price. Something in the stock market, you also have volume. When a lot of people goes down to buy a particular stock, it pushes up the price. So you might buy a stock today, and then the next day, a lot of people, something good happens, and a lot of people decide to buy that stock. You will just get up, something was $10, and by the end of the day, it's like $20 a share. If you sell, you make a profit of $10 per share.
All right, let's talk about one word also that usually fluctuates when people are talking about stocks. They talk about their portfolio.
Oh, portfolio.
Yeah.
Yeah, just look at portfolio. On a layman's term, portfolio is just your account. When you go in, you have Coca-Cola, Walmart, that's your portfolio. It's just a stock market word.
So how do you build up your portfolio? Is it like I go today and then I buy Coca-Cola, go tomorrow, I buy Walmart, 3 days later, I buy HP computer? How does it appear when you try to manage your stocks?
Good. That's a good point. So most of them, if you look at your portfolio, the stocks are listed alphabetically. When you buy Apple today, it will be number 1. If you come in and you buy Walmart, it will be at the bottom. If you buy Google, it will be at the middle. So that's your portfolio. You can sell something out, you bring something in. So that's how it works. So it's just like you balance, you have one in this industry, you have the other in another industry. I'm sure you might have heard about balanced portfolio. You try to balance it by diversifying.
Yeah, so that would have been my next question. How does that work? So I have, as you said, like Coca-Cola, Walmart, and whatever. And I'm like, okay, Walmart is not doing well. Is there a possibility for me to just move some of my money from Walmart and dump it into Coca-Cola?
Good. Once you have your portfolio and you want to balance it, if you don't want that Walmart anymore, all you do is you sell it, and then the stock market is instantaneous. You sell, the balance drops on your cash balance, then you now buy the Coca-Cola.
Oh, okay. So you cannot just switch it. You have to sell, then you buy.
No, you have to sell. Nothing will link to company. They are 2 different separate entities.
So what would be your advice for some people who will be looking at getting into portfolio? What would be your advice? What should be some of the things that they should be looking in putting into a portfolio?
Okay, so my advice, first of all, if you get into the stock market, again, knowledge is power. Either take a course, a workshop, or you read a book to know exactly what you are doing. Again, it's a little bit risky, so that's why I always come up with that. If you want to start in the stock market, I always say start low. So look at your industry, whichever industry you are. I know you are in environmental. You can check, okay, which waste management, there's a lot of Toronto waste management, they're in the stock market. You probably go there maybe twice a week for work. You start with them, you buy them out. You look around. I see you in Walmart all the time. You like Walmart. You buy your Walmart. And then you look at your portfolio, you're like, okay, you have something in merchandise, you have something in environmental right now. You want to balance it. What are you missing? You said, okay, you need something in the medical field. Pfizer was doing well, Moderna was doing well. You buy Moderna or you buy Pfizer. Okay, you look at it again, you say, oh, you don't see anything technical. When it comes to technical, there's Apple and Microsoft. Apple split it 2 years ago. It's still down. It's around 150. You said, let me get a couple of apples. You add Apple. That's how your portfolio builds up. With time, when you own those stocks behave. You see how they behave. You see the one that is doing well, the one that is not doing well. If one is moving faster than another, and the other one is still profit, I always tell people don't sell at a loss. You can still, just like you mentioned, you spoke about Walmart and Coca-Cola. If you have two stocks, one is doing well than the other, you can decide to sell the one which is not doing well. You increase the one that is doing well. Let me tell you a story. Tesla did a split, 5-to-1 split in 2020. So 2 years ago, Tesla did a 5-to-1 split. That same year, Apple did a 4-to-1 split. Tesla started around $395, Apple started around $110. Tesla moved up to 1,200. Apple has struggled and Apple is still around 145. I bought the same Apple and the same Tesla. I made $35,000 profit on Tesla. I've not even made up to $5,000 with Apple. Do you think I will be holding Apple for long? I sold half of the Apple and increased my Tesla. So I already know how Tesla is behaving right now. Tesla, the board of directors are having a meeting next month, August 4th, for another split 3-to-1. I'm waiting for it. Tesla is a game changer. If you look at the CEO, Elon Musk is very dynamic. Those are the people that will not let their company down. Their earning report just came out 2 days ago. Guess what? He had Tesla invested in Bitcoin. He realized that his earning report will not do well. He sold a huge amount of Bitcoin just to increase their earning. So that's how, CEO makes investors like to get into a company.
Okay, so let's talk about investing in some companies in Africa. Is there any possibility for us here to look at some companies in Africa and invest in them? And how does that work?
Yes, you can invest in companies in Africa. So see what is happening. You are investing here in Canada. When you look at Toronto Stock Exchange have the companies that are listed in Toronto Stock Exchange. If you go to New York, you have the companies that are listed in New York Stock Exchange. If you look at an African company like Jumia, which is also an e-commerce, if you find it in Toronto Stock Exchange, when you buy it, you are investing in the African company. If it is in New York Stock Exchange, if I buy it, I'm investing in that African company. So it doesn't matter where the company is if they are listed on that exchange. That's what matters.
So how do we find out where some of those companies are listed? Say Arab contractors or I don't know, some airlines. Is there a way to Google and say, oh, okay, this is where they are?
Yeah, that's a good thing. There's what they call stock screeners. So it's also on my book. Stock screeners is where you type in any company and it will tell you where it is, which exchange, which country. But for a layman's perspective, if you are in any of your account, just type that company on the symbol lookup. If the company comes there with the ticker symbol, it means it's in that company. Or if you type it in Google, it will list all the exchange that it's in. So if you type in the company, you will see the name. There will be like New York Stock Exchange or London Stock Exchange or NASDAQ. So that's how you know where it is. But the easiest or the simplest FinViz, the simplest stock screener is finviz.com. It's free. It's a website. You go in, you can, look at the companies and try to filter it and know where each one comes from and which exchange they belongs to.
Okay, we have about 10 minutes to round up. So we are going to talk realistic numbers here, and we are going to try to address the last part of what we had on the flyer, which is what are some of the realistic stocks that people should invest in? What are the winning stocks in 2022? But let's start with realistic numbers. Give us some realistic numbers for people who want to invest, say, $1,000. So say if we want to give you $1,000 to invest on our behalf, what is going in for? What are you going to do? What are some of the things you are going to be looking into? What are we going to be paying you? What will be the amount that will pay you? What will be the amount that is going to be maybe charges and all whatnot? And what will be our return, say, in 6 months or 1 year?
Okay, that's a very good question. By the way, in the stock market, well, in Canada, you either have the bank that will manage it for you, or you manage it yourself. It's illegal for someone to manage your account. That's why I don't manage people's account. A lot of people have come to me for me to manage their account, but it's illegal. It's unethical. I just tell them what to do. If you have $1,000 right now in the stock market, it's a good time to get in with that money. So see what you'll do. You open an account, I will advise you to go with Questrade. Because with Questrade, and by the way, I have a link which will give you $50 of free trade to start. So when you go to Questrade, you open your account, you fund that account with $1,000. With that $1,000 right now, I have 3 companies that I will recommend. Normally, I don't recommend companies to people who are not in the stock market or people who are not very knowledgeable about the stock market. The reason is because I might recommend a company for you, which is a good company. As times goes on, you might not know when to come out. In stock market, there is 2 things, fundamental analysis and technical. Fundamental, what you are buying, which is what I'm telling you right now. And technical, when you are selling. I recommend some stocks to people in my group. I have a WhatsApp group of over 230-something people. When I recommend stocks, I don't come back to tell them which stock did you buy or have you sold or not. When it reaches time for me to sell, when I see maximum profit, I sell. So see what you will do. With $1,000, first use $500 to buy Amazon. Amazon is very powerful. It's one of the best companies in the world. There is no doubt by December, you might see, it might even double by December, Amazon. Again, when you invest in the stock market, you see how Amazon is a good company? It's because of the historic event and the present value that Amazon is a good company. If you buy Amazon today and Amazon start creating less value within 2 or 3 months, it will not do well. So that's why you see stock market. Most people were thinking stock market is finance, but stock market is not. It's technical. You forecast. You look at it, you forecast. If this company doesn't do well, you're not going to make money. But because of the historic event of Amazon and the asset value and the net worth, I know that Amazon will do well. It will double. So $500 will go to Amazon. Then $300 will go to Google, because Google is also powerful. These companies are all less than $130. Then last but not the least, for the sake of diversification, let's get Amazon and Google are all US companies, right? So let's get one Canadian company. So we'll get Shopify. And why do I say Shopify? Shopify is like the Amazon of Canada. It's known worldwide. It was 350. They also did their own split, 10-1. So it came down to 35. Now it's 37. The probability that it will double by December is 1. So high potential. So 3 stocks to go away with it. Amazon, 500, 300, Google, the remaining 200, you can buy a lot of Shopify because Shopify is even cheap.
Okay. So all this that you gave us, you are hoping that Amazon might double, Shopify might double, and Google, you are not very sure if it will double, but you said it's going to give something more. So if that happens, it means if you invest now, you are looking at what, 300 would double, so 500 would double. So you're looking at almost $800.
If everything doubles, then that
no, not everything. I'm not saying everything doubles. I'm saying like moderately. So
yeah,
so that would be some realistic figures that we're
moderately. And stock market is a numbers game. Stock market is a numbers game. There are a lot of people who are going to make millions with Amazon. There are people who will make just $100 or $200. If you buy one and it doubles and it triples, how much will you make?
Yeah,
you make just $600. If you buy 100, like one of my colleagues in the US just called me today, that he bought 100, it got me excited. I'm like, wow, that's good. So it is a numbers game. And stock market is not about quantity, it's about quality. I see some people's portfolio, they have 20 companies, 30 companies, and I laugh. You don't need to have more than 10 companies. Why? Because each company in your portfolio, you have to track the success of that company. If the company doesn't do well, you have to sell the shares. If you have 20, 30, would you be able to track 20, 30 companies? Probably not.
All right. So we have about 4 minutes to round up. I'll read one comment. Most people in our community may be seeing stocks as a foreign idea. Proof is that many Africans have been more into crypto and things like Limal. What's your opinion? Well, I'm laughing because he was here when we're discussing the same things that maybe I'll put up that video on our WhatsApp channel. We had a whole episode on cryptocurrency and we discussed the fluidity of cryptocurrency.
So now you believe me, right? You believe me when I was...
Well,
so now
yeah, we had experts who everybody gave their own opinion, and we brought you to tell us what you think. And so I might put on that. But if you want to just brief people again on what we had discussed on crypto.
Yes, so cryptocurrency is speculative investment. There is no data holding it underneath. So when you hear about Bitcoin or Dogecoin, when a lot of people start buying, it goes up. When people don't talk about it, it goes down. So it's not like you will say, oh, their earning report moved from 1,000 to 20,000. So it's speculation. Why would I invest in speculation when I don't know when I will even make profit? We just talked about if you buy Amazon now, by December, it might double. If you buy Bitcoin now, you don't know when it will double. There's no idea. You don't have any idea. Then talking about Leipima was a private third-party company which was they were investing in cryptocurrency. They also said they invest in agriculture. They were selling packages to people. It's not even shares, it's not even a convertible notes. They were selling these packages to people and they were not protected by any commission. Stock market is protected by the Security Exchange Commission. You can never lose a dime in what you invest. If you invest in your bank, would you come one day and all your Amazon are gone? Probably not. If you come one day, all your Googles are gone? No. So follow the right track and the legal track and any particular investment which is protected by a commission.
Okay, we are about to round up, but before you give your last word and your last advice to all those who are listening, I would like to thank Anna, Susie, Aroke, Claire. Those are the people who made comments, and for all of you that have been listening, it's been a pleasure having everybody tonight. I hope you enjoyed the discussion. Again, if you want to reach out to our expert here, Victor, please do. You can reach out to me, or you can check his website. We have all the websites. I'm going to repost them before I close the show. So, Victor, over to you. What is going to be your last word for this discussion tonight?
Well, it's going to be a last statement, and I just want to, this is just my advice to people who are getting into the stock market. It's a very lucrative investment venture. Come to think about it, the three richest people in the world, what they have in common is the stock market. Warren Buffett, all he does is stock market. You can see he's buying all these companies. Jeff Bezos, Amazon, is Amazon that makes him becomes a millionaire. His stock market. The guy from Tesla, Elon Musk, the same thing. So here's my advice. Before you get into stock market, knowledge is power. Get the knowledge. Only invest money that you can live in the market for a while. If you have $10,000, don't go and invest all, then an emergency come in, you cannot, because sometimes the stock market holds your money. Always watch for the fees, because the fees do matter. And be very, very patient. If sometime your stock goes down, you might rush and sell it, and the next day it starts going up. So be very, very patient. And then let bygones be bygones. A lot of people, because they bought some stock a couple of months ago, it's not doing well. Guess what? They just close that account, or they don't look at it. And now is the opportunity now to get into the market. Because of this crisis, you take advantage of this crisis. People who want to make money in the stock market, now is the time to buy. So that's my advice to people who are getting into the stock market.
Okay, special thanks to Valerie, Therese, Susie, Solange, shipvista.com. Wow, shipvista.com. Maybe you'll have something to tell us one day. Peggy, Mimi, Kingdom Faith Center, Joseph, Goddess, Forche, Claire, Aroke, Anna, Adeji Sola, and of course, Victor. It's been a pleasure having you here. As I always tell you when I meet you, you have so much to share with the community. There are so many thank you there from Therese, from Aroke, from Forche, from Solange, from Goddess. Everybody on the forum is saying thank you, Victor. And it's been a really pleasure, eye-opener. I am going to be looking and buying some stocks maybe tomorrow. And if it doesn't give me money, I'm going to come back and hold you responsible.
Good. Watch this video. This video will be like, like what you used to calculate the time that we discuss and the time that,
yes,
you see the return.
This is, that's one thing that we've been looking at with my team in Perspective Nation, is to, like, when people give some of these advices, maybe we'll put them actually in practice and put in some money and see what happens, so that the community can actually believe. And we put a platform where the community can go in themselves and do these checks and balances to let it not just be that we come here and talk and nothing really happens. So we are going to look at such things. Please, if you have any interesting topic that you want us to discuss, don't hesitate, bring it up. And you have any business that you think is going to benefit the community, please bring it up, and we are going to definitely have a conversation. Thanks, so everybody.
I have added my YouTube channel, so let some of your guests subscribe to my channel. And also, all this information that we are discussing, we have a WhatsApp group that we are sharing this information. For today, I will give it to your group.
Yes.
I'll put it there for your group to go in for people who want to join. That's the link up to the group.
I can't see it. You might have sent it to a specific person.
Oh, okay. I was sending it to, yeah, that's true. Let me send it
to everybody. Yes, it's very important. I do apologize. We've taken 3 minutes out of time, but I think it's important that people have these links. And if you want to leave now, please feel free to do so I don't take much.
Yes, so that's the link. And then my YouTube, I'll send my YouTube. So do you see it? You see the link?
I've seen the link. I've not seen the one for the YouTube.
Okay, YouTube is coming. Okay, that's the YouTube.
Okay, people, do not hesitate to use these opportunities, and I'll just leave it there for some time for those who want to link up. Again, once more, thank you.
For people who want to get to Questrade, that's the link. Questrade will give you 50% or $50 to start trading.
Okay. Again, it's been a pleasure having you. I wish everybody a nice weekend. Make sure you drink a lot of water. There is a heat wave going around. Till then, good night. Bye-bye, everybody.
Good night. Bye-bye.